What's going on, traders? Welcome back to another video. Today, I want to talk about a question I get a lot from traders. One of the most popular questions I get is, Josh, what time frame should I trade on? I get that a lot. And there's a lot of confusion around time frames and what time frames are the best and what time frames you should trade on. So we're going to hit that on the head, and I'm going to answer that question for you guys. So it really starts with, what type of trading are you doing, right? If you're doing more like longer term swing trades, like 3 months, 6 months out swing trades, you're better on the larger time frames, looking at the daily, the weekly, the monthly. If you're thinking 3-6 months out, there's not really a need to go down to a lower time frame like a 5-minute or a 15-minute. I mean, you may get down into like a 1 hour or 4 hour to see like price development, price action on the lower time frames off your daily zones and analysis. But realistically, you could just focus on a daily, weekly, monthly if you're just going to be swing trading, again, like 3-6 months out. And that's what I do. If I see a trade that looks good on the daily, I do my analysis on the daily, weekly, monthly, and I see potential, I'm primarily going back to the daily to wait for the daily to come into this area that I want to take a trade. I enter based on the daily chart, and I manage my trades based on the daily, weekly, monthly. I'm not really going down to my lower time frames to identify and to enter a longer term swing trade. Okay. So again, the point is it comes down to how are you trading? What's the style? Swing trades, we talked about it. If you're doing more day trading, in my opinion, there's like two different forms of day trading. You have like scalping, like quick hits, quick in, quick out, 5, 10, 15-minute trades. You're looking to get in, get out quickly. You're not looking to add to the position little by little throughout the day. You're not looking to manage it, scale out, reposition, rebalance. No, you're just getting all in, all out quick. Quick scalps, 5-10 minutes. Yeah, your lower time frames, right? You're going to be inside of a probably 2-minute, 5-minute time frame, intraday to take these trades. Now, does that mean you're doing your analysis on a 5-minute? No. You're still looking at your larger time frames to do analysis, like daily, weekly, monthly, the 4 hour, the 1 hour, the 30-minute. You're still going to look at all your time frames to do your analysis on. But when it comes down to actually taking the trade, yeah, you're going to be on like a 2-minute or a 5-minute time frame. As price is coming into, say, like that daily zone, you're able to read price action clearly on a 5-minute or even a 2-minute at these levels to validate entries on your trades based on price action. So it's going to be easier to see that on your lower time frame, but you're still definitely doing analysis on every time frame, the weekly, the monthly, the daily, the 4 hour, the 1 hour. But when it comes down to actually taking the trades, that's when you start stepping down to like a 2-minute or a 5-minute time frame. And something I do is periodically throughout the session is I flip between my time frames. Like I've already done my analysis before market open, but I'm still going to just flip between my time frames and see, is there anything else I notice, right? Is there anything else that's developed or any other key technical area that I can now see at 11:30, right? That wasn't there at 9 o'clock when I initially did my analysis. And sometimes I will see other things that I should go ahead and, mark up. It could be a 30-minute fair value gap that was created, the first hour of the day. I wouldn't have seen that at 9 o'clock. I see that at 11:30 and it's valid. I'm going to mark it up. So if I'm not actively looking to take a trade because the stock's price is not at a key level, I'm still constantly flipping between my time frames, doing more analysis and marking up what I see to get that much more prepared. But as price is coming into some of my higher time frame key levels, that's when I'm down into a 5-minute. Sometimes I flip down into a 2-minute because I'm able to actually read price action a lot more clearly at these levels to help me make better decisions on my trades. All right, so go ahead and sum it up. What time frame should I be trading on? It depends on the style of trader that you are. Swing trades, you're on your larger time frames. There's not really a need to go down to a lower time frame. If you are doing day trading, like you're scalping 5-10 minute trades, yeah, you're going to look at every time frame, but when it comes down to entering the trade and managing the trade, you're most likely going to be on a 2 and a 5 primarily. If you're doing more traditional day trading, right? Because there's those two styles we were talking about, more of the scalper, all in, all out, right? Then you have more of a traditional day trader where you're looking to build positions gradually, manage it throughout the day, and maybe scale out, add back in. You're working that position over an extended period of time. If that's the case, then you're probably going to be doing more like 15, 30-minute, 1 hour analysis because you're going to be in these trades for an extended period of time. Or if you're going to be in a trade for like 10, 15 minutes, yeah, the 2-minute, 5-minute for execution for management makes sense. You're going to be in a trade only 10, 15 minutes anyway. Why are you going to look at the hourly candle? By the time the hourly candle opens and closes, you're already out of the trade. It's not going to really help you, right? But if you're doing more of the longer term traditional day trading where you may be in that trade for several hours, yeah, go to a 15, a 30, a 1 hour to assist you with the overall management of that trade. So get clear on, what do I trade? What's my style? Right? If you're day trading, you're primarily scalping. You're going to do your analysis on every time frame. But when it comes down to getting ready to take the trade at these key levels and then managing the trade, you're going to want to flip down to the 2-minute and the 5-minute. Again, that's my preference. That's what I prefer. But at the end of the day, it's what works best for you. But this is a good starting point for you guys that were unsure, uncertain. And this will hopefully give you guys a little bit of clarity.